Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for April 9th, 2024. Let's take a quick look at what the markets did today. Well, basically a repeat of yesterday, not a whole lot going on. There was some excitement earlier in the day with a bit of a drop and then a recovery, but so, excuse me, a much wider candle from high to low compared to yesterday. But at the end of the day, if you look at the closing price from today, from yesterday, from last Friday, it's all basically the same. So market's been on hold for what we believe is going to be a very interesting CPI report tomorrow, along with the meeting minutes from the Fed. Actually, let me just go to the economic calendar here before I show you the other chart. So this is what we're expecting out tomorrow. We get core inflation month over month, year over year. We get the inflation rate month over month and year over year, and the FOMC minutes. And then on Thursday, we get the PPI month over month. Now, what's important here, one that's going to be watched closely, aside from the Fed minutes, just to see if, all the Fed officials were unanimous on their decision, et cetera. We'll, excuse me, we'll see what happens there. That's due out at 2 p.m. But before market open, 8:30 a.m. we get these announcements, and the inflation rate year over year, I think, is going to be the big one. Reason being is, if we go back and look at what the trend has been so far in 2024, January it was 3.1, February it increased to 3.2, and now the consensus this time around is actually 3.4, 2 basis point hike. So if we see it going up from January to February, now to March, increasing over and over again, it's going to be very interesting to see how the market reacts. Now, if we come in at 3.3, it is still an uptick compared to February, which will be a concern, but it'll be less than consensus, and in all likelihood, it won't be that exciting of a day. If we do see a print at 3.4, and definitely, I think if we see a print above 3.4, which I would be surprised to see that, but if we do, I think that will definitely put pressure on stocks. And what's interesting about this is where we are. Remember, location matters. And right now, when you look at the Dow, we put in this potential, what was at the time a potential double top. Now, this is just a daily chart. It's not a very long-term chart, but that the two peaks come in at more or less the same level. We break the midpoint low, so it confirms a double top there on the daily. We then breach the 20, come down. We pop a little to come back and retest that 20, which we haven't really done. And so what's important here is the low. If we turn around again and take out that low, yes, there is still some support immediately nearby here, but if we break this low, this is going to be very important, very bearish near term. So are we close enough that we can breach that tomorrow? Absolutely. And that is the concern if the number is higher than expected. The S&P 500, it's the same thing. If we come back and take out this low, we are likely to see more downside. The NASDAQ, exactly the same thing. And all these lows are well within range for a move in one day. All right. And the Russell, same thing here. So, and then if we look at market leaders, for example, Apple, we've been watching Apple for a while, and the level we've been talking about is the 165 level drawn in here. Now it's kind of slowed down its pace a little here, but it's at 169.67. So is it all that far from 165? No, it isn't. If we have a huge down day tomorrow, it can get there, or by the end of the week. In other words, it's very close by. And the concern is, if a market leader breaches a significant level like this, then people start to pay attention, and people start to get a little more concerned, and we go from there. What else have we been looking at to the short side? We've been monitoring Tesla. Now, Tesla's had a couple of days of a bit of a bounce here, right? But would it take much to have it roll back over and close back below the 20 and set up short again? Not at all. A day like tomorrow could actually um, see that we can actually see that tomorrow. So, and if it does, remember the whole reason why we're so bearish on Tesla is the lack of support. It's another big name, carries a lot of weight on the index, and it could easily flush. So, BIIB. Now, this one doesn't carry as much weight, but we've seen a couple days of uptick. We're right back to retest that level. Okay. If we get a solid down day tomorrow, it could easily get rejected off that level and see you later on the road down to 70. Right. So let's look at another one, Alibaba. Right. Alibaba's near all-time lows. Let's go back to the daily here. We got back to that level. This is what we've been watching. Can it breach these two red lines? It got right back there. It's bounced for a couple days, right? Can it get there? I mean, from 72.99, we're talking about a move below 70, excuse me, 71 here. Even if you round it down to 70, are we that far? Not at all. We could see that in one day. Um, and that would be a break out of this lengthy channel. And as we head into new all-time lows, absolutely no support below. It's still a $73 stock. This one has got a lot of room to go. So, you know, during a market where, when you have such a strong uptrend like this, and you start to roll over, it's usually a while before you start getting some solid short positions on, right? I mean, some of the smaller stocks and so on, some of the lesser known will be setting up short and so on. But it's not very common that while you're in a strong trend like this, um, that the second you start to roll over on the daily chart, let alone the weekly or the monthly, that already you have some significant names giving you some solid setups to the short side. Another one I'd be concerned about, and this is probably the biggest name recently, is NVIDIA. NVIDIA here flirted with this low today. I mean, we we look at this as a potential double top. Where's the lowest point between those two lows? It's right here. That's why we drew the red line here, right? I should extend this out. There it is. All right. And today it actually dipped below there. It didn't close there. It bounced and closed back above. But is it all that far from there? If we have a down day tomorrow, can we see it close below here? And if we do, we're on the road more than likely to retrace this very strong move here. And that is a big, big name, a lot of eyes on it, carries a lot of weight, carries a lot of weight in the index, etc. So my point after this big long spiel is we could quickly see a shift in this market. We've had an inkling that maybe, hey, it feels like we're kind of putting in the top. Maybe we will be correct in our theory, and this will quickly shift. Again, it, until we actually see the charts confirming this, we don't do much here. But wait, but we we have an event coming up that could potentially drive this or kick it off. And then remember, we're into earnings season later this week, right? The banks start to report Friday morning before market open, and it certainly into next week and the few weeks that follow, bigger and bigger names will be submitting their numbers. So this is going to be very interesting. Certainly has the potential for added volatility in the next few weeks. But tomorrow morning we will know. Um, you know, at least we'll get an idea of in which direction this market should take the next step, right? So we'll see. What I would suggest is, or what I will be doing, is not watching the futures overnight. I don't think there's any reason for that. But tomorrow morning, take a glance at them just before 8:30. See where they're at just before the announcement, and once the announcement comes out, have a look at how they react during that next hour from 8:30 a.m. to 9:30 a.m. when the market's open. Remember, The volume in pre-market is nowhere near what we see during the actual live session. So things can move rapidly. So you may see some wild swings, etc. But at least you'll get an idea of where this market may be heading towards the open tomorrow morning. So again, consensus on that inflation number is 3.4%, which would be an uptick from 3.2% the prior month. Let's see where we go. But if we put in a pattern of higher and higher, that inflation rate going up, back up again, that could be a real troublesome sign for this market. It is going to affect the dollar, which will affect gold and everything else. So, at this point, let's wait to see what the number is and then go from there. But expect some additional movement in the market here. It's been a quiet couple of days. I don't think it's going to be very quiet for the rest of the week. All right. That's about it for now. Enjoy the rest of your evening, and we will see you on our next update. Take care.